You might have come across a couple of videos or a lot of videos of YouTubers saying that the stock market will crash for the rest of 2021, inflation will get even worse, and all of that stuff. But in this video, I will summarize everything to you in a few minutes so you don't have to waste your time to watch all of the other videos, just like me. The stock market for this year has been filled with tons and tons of surprises and unpredictability. So the question on my head, on your head, on everyone's head is, how is the stock market going to perform for the rest of the year 2021? So here are my information.
So if I'm wrong about inflation and we end up having larger or high inflation, then I think, first of all, stocks are, especially the tech and growth stocks I'm in, their future earnings are going to get sort of discounted much more heavily, and the market could pull back. We could have a very bad few years for like Cathie Wood, ARK Invest.
If the inflation is really strong, you heard me, Kevin, the tech stocks will go sideways. Growth stocks will be trading sideways for a few years. And as inflation increases, there will be more taxes or interest rates. And this could cause fiat currency to be less valuable than what it was before. And that also means that there will be lesser room for growth and development for smaller tech companies. Of course, big companies like Apple will not be affected at all because they're already that big. It's just the psychology in the stock market that triggers the stock market's prices to go up or down that affects us. Moving on, this is the fastest we have ever recovered from a stock market crisis since the last 100 years of stock market crisis. So it's not surprising that many people will be skeptical of whether if this is sustainable or not. So the S&P 500 just hit an all-time high at 14 July at 4,369 points. Seriously? After all of the people dying and infected with the COVID-19, we can still able to hit all-time high with the S&P 500. Kind of strange, but when I explain it, then everything will start to make sense, or at least for me. So according to this article from investors.com, the market is feeling a big impact from supply chain woes as production restarts take longer than usual. Also weighing on the market are inflation worries fueled by consumer prices rising at their fastest clip since 2008. Therefore, the impacts are not clear, and according to Swenson, everyone is trying to feel things out, and he believes that there will be a lot of rotation for the rest of the year. This statement really makes sense to me because when everyone is trying to feel things out, everyone have their own conclusions. Therefore, people will be rotating on their own pacing, which creates volatility in the rest of the stock market. So here is my own take. I'm going to use peak to trough graph, compare them side by side so you guys can see exactly what I am seeing. So we're in Forbes.com or Forbes, I don't know how to read this, but here we go. In 1929, we have a decline of 88.7%, 1987, Black Monday 31.1%, the dot-com bubble at 34%, and the Great Recession at 49.3%, and for the Corona crash, it is the least serious one at 27.9%. So moving on to the next graph, it took 34 months for this crisis to recover, 3 months for Black Monday, 43 months for the dot-com bubble to recover, 16 months for the Great Recession, and only 1 month for the Corona crash. According to my own research and my conclusions, there are a few reasons of why this Corona crash took such a short time to recover to where we were before this whole pandemic was. Number one, it's a quarantine pandemic. People are losing their jobs, therefore they will be turning to an alternative source of income. So the stock market is where they turn to as it is the most accessible ones. All you need is a smartphone and a Wi-Fi, and pretty much all of us have that nowadays. Number two, like I said earlier, technology advancement. The entry barrier is very low and pretty much anyone and everyone can invest from anywhere, anytime. Not to mention, in the year of 2020, 20% of the market activities were made up by new retail investors like you and I. Maybe not you, but me. Also, there are a lot of Facebook groups and Reddit groups being made on discussing on what is the next best investment to make, meme investing, GME, AMC, etc, etc. Number three, the stimulus from the Fed and the Congress. About 9 trillion US dollars was printed in the year of 2020 itself. Until today, there are about 20% of the circulating supply of the money that we have are printed last year. So obviously we're going to be using the benchmark, which is the S&P 500. And normally I like to use the Bollinger Bands and the RSI because this is the most basic and the easiest, simplest way you can ever tell where the market is heading. 20th of July. It's trading at 4,316. It is above or just right in the average. And for the RSI, we're currently at 53, which is at the average price. So I believe, if I'm not mistaken, my prediction is that I believe that the S&P 500 will be trading sideways for a little longer for the rest of the year. If not, it will just slowly move upwards, because obviously you guys can see that it is on a uptrend. My third take is that people will start to invest into the retail sectors or the consumer sectors again. Like I mentioned earlier, a lot of people will be anticipating that the economy or the world will be opening back up. Therefore, retail sectors and the consumer sectors will be starting to do well again. So in my opinion, what goes up must come down. But for stocks in the long term, stocks only go up.
Stocks only go up.
So if you want to know how to invest for the rest of 2021, my solution for you is simple if you do not want to do any technical analysis or you do not want to time the market, and that is the good old dollar cost averaging. If you don't know what dollar cost averaging means, it means that you just keep buying and holding no matter the price is up or down. Simple as that, but it's very beneficial and very profitable for the long term. So what I'll be doing right now is that I'll be holding some cash, waiting on the sidelines and see whether if I could enter into Apple at a very good price point. That is my plan so far, and I could be wrong. But I'll definitely make another video to update you guys on my stock market move and if anything affects the stock market in the near future if necessary. With that being said, I would like to propose a toast to the rest of the year and happy investing for the rest of 2021. That's not working.
He was playing games, got you dancing in the middle of the club, got you dancing.